If you think audits are a once-a-year hassle, think again. Audits are becoming more and more strict, and many of you are frankly just not prepared. And this isn't about paperwork, but it's more about keeping your funding, your credibility, and your mission top of mind and intact. And so that's what we're going to be talking about today. Here's the reality. Audit requirements are continually evolving. You have grantors, different funders, foundations, and frankly, government agencies, right, that are demanding more transparency, and the reporting requirements are stricter than ever before. And if your nonprofit is not prepared, there are a host of consequences that could potentially happen to your organization, which we want to help you avoid, right? And so that's what we're going to be talking about today. I want to talk a little bit about what's changing and how you can get your nonprofit ready before it is too late. So why does this matter now? There are a lot of you out there who think your books are fine, right? But then when the audit comes, there's a mad dash to get things in order. The auditors are catching errors. There's missing documentation, weak controls, and all of this is preventable, right? And it truly takes some time for you to do an internal assessment before your audit even comes up. Do an internal assessment to see where does your organization stand. And there is no better organization more positioned to do this than one that has been audited in the past. You know what the auditors are going to, at the very least, request. You know that that initial PBC doc typically always includes the same thing: your GL, your TB, your bank statements, right? Your fixed asset schedule, your prepaid schedule, right? Depending on the organization, there are certain documents and spreadsheets, things that they will always look at. There's a starting point for you right there. And so this matters now because we're facing a new reality, right? Funders are no longer satisfied with a basic ledger or a simple income statement. They want proof. They want undeniable proof of internal controls, of your cost allocation. That is a big one right there. And accurate reporting. They want to know, where are your restricted funds on that balance sheet? Where have they been spent, right? How much is left? Every dollar counts, and you have to be able to show that that is the atmosphere that you've created where you can actually show your auditors that we believe this and we follow this, right? This goes to show that no nonprofit is beyond reproach, right? Those who fail to adapt risk not only losing funding, right, but also damaging their reputation, and we don't want that to happen, right? A lot of times that can take years to recover from, and we want you to be around. We want you to be here, and we want those that you serve to continue to be served by you because you are making strategic decisions and choices in how you choose to run your organization. We don't just want to go into the problems and wag our fingers. What's really the solution here? Well, for one, your accounting function isn't just a back office necessity, right? It is your line of defense. And so a strong accounting team, clean books, proper documentation, strong internal controls, audit-ready systems, that helps you to be confident that when these auditors come in, you have what they need. There's no request that they'll ask you and you're scared because you're like, I don't think we were doing that. Or did we do that? Do we have that? You want to think of it as building a financial safety net. So when your processes are organized, automated, where applicable, right? Audits do become less stressful. And I like to say less stressful because, frankly put, even when you have all your ducks in a row, sometimes it could still be a little bit stressful because you want to do good, you want to do well, right? You want to make sure that you come out on top of this. And so even if things are in order, it could still be a stressful time. But our goal, at least with the clients we work with, is to make it a little less stressful, to take some of that weight off of your shoulders and to put it on ours, right? So that you can focus on what really matters, which is serving your community. So we're going to go through 4 key steps to prepare for this stricter audit reality. These are not some game-changing tips and hacks. I think sometimes we get so caught up in thinking that we need to hear something new when the reality of the situation is that some of this is just fine-tuning what you just should have been doing all along, right? Some of it is not some new discovery. The first one is audit-ready documentation. But how many of you are doing that? When you close your books, right? How many of you can say that if the auditor came in tomorrow, right, you have a clean GL to provide them? Your trial balance doesn't need any work. All of the balance sheet accounts have been reconciled and have the appropriate work papers to support the ending balances on the balance sheet. How many of you can say that for your expenses, you have adequate supporting documentation? For your income, you're appropriately tracking what's restricted and what's not and how you're spending these funds. That right there is enough work I just gave you. Because I'm sure one of those things you should work on, you could work on. Keeping your files organized, making sure your receipts are easily accessible and clearly organized. You have contracts that support these agreements that you've entered into with different service providers, people that are supporting or doing work for your organization, right? Did you have the proper reports? Every dollar is traceable. This is what I'm talking about when I'm thinking of audit-ready documentation. That's step one. Are you there? Because if not, you need to start there. That's where you need to start. Step two, do an internal controls check. One of the things that we've been doing with our clients, maybe for the last 1 to 2 years, has been an internal audit. We used to do it once a year, but now we do it twice a year because we don't like to assume that things just continue throughout the year as it always has been, especially because things have just been changing so rapidly. And so we like to do it twice a year, but it's where we do a check to say, like, how tight is this? How rock solid is this foundation? So when I think of that internal control check, that's part of our internal audit assessment, right? So making sure that there are appropriate segregation of duties, that there are approval processes in places, and that doesn't need fixing, right? Because, as your organization grows and it get larger, or as there's an uptick in the amount of money going out the organization, some of these things you might have to reel back in and say, wait a minute, we need to change that. We need to make sure that there are appropriate checks and balances, right? If there's checks going out, do we know that after above a certain threshold, someone is supposed to give a second approval? Thinking through these things, thinking through how your organization operates and making sure that you have the controls in place to support that. Does this support the growth that you're assuming that you're going to have in this year? If you are an organization that has experienced possibly layoffs or maybe even your organization has shrunk due to maybe a decrease in funding, some of this you rewire because you may have had all of the things, but now you need less. Because whatever the process is, it should suit where your organization is, right? And not to mention, it could probably be a cost saver for you. So you want to be thinking about that. The third step is cost allocation and restricted fund management. And now that I'm thinking about it, it probably should have been 2 separate steps because I have been seeing a crazy uptick in auditors wanting to truly understand how an organization is allocating expenses. That is a huge, huge thing. And I think it's because funders want to make sure that they are not covering the costs that are not allowable and that they're not covering costs that belong to a different grant or some other program that they didn't sign on to pay for. And I only know this because, again, I've been doing this for a very long time, but also we literally just got out of an agency audit. And that's pretty much what the auditor told us. You charged us in your invoice X amount of dollars for program food and supplies, and we don't think that it takes that much food and supplies. We want to clearly know how you came up with how you're allocating this food and these supplies to our grant. I say all that to say you need to be very, very prudent. You need to know, you need to be very clear on how you're allocating expenses, and not just clear, but then it needs to be supported by proper documentation, and you need to be able to speak to it. You need to be able to back it up. You need to be able to prove that this makes sense. 3B would be restricted funds. You got to ensure that every donor restricted fund is properly tracked and reported. Misstatements can trigger huge consequences for your organization. We have a client who has a restricted grant, and they actually have to invoice for it monthly, and the whole last quarter has been held up because that funder doesn't believe that these expenses are accurate and applicable to their grant. They're not necessarily doing an audit, but they have come back multiple times asking questions and digging into things, wanting certain, supporting documentation before they pay out. However, this organization still has to run. They're still running payroll. They're still spending, and they have funds from a whole quarter that they haven't been paid out and are not sure when they're going to be paid out. This is just another example of why you have to be on top of things. It's not enough to just say, oh, we've got the accounting system. Someone comes in, once a month, reconciles everything, and that's that. Accounting is much more than that. And then the last one is leveraging tech and automation. A lot of these tools that we are now using are implementing, AI. There's a lot that can assist you, because I don't say you should hand it all over to tech, right? I do think, overall as an industry, we are behind in how we're using tech to improve a lot of the work that we're doing, right? And it can help save time and it can help minimize errors. And so as we're thinking about this stricter audit, environment, you need to be thinking about how you can leverage tech, but then also you got to make sure, right, that your processes and your fiscal manual is also backing up how you use these things, right? So anything that you're implementing and saying we use this to do this as it relates to this function, you do want to make sure that that is documented, right? And so if you follow these steps, if you just start there, because I could keep going, but if you just start there, these steps will help you to transform your accounting function from a client compliance risk to a strategic asset. To be honest, when an auditor is coming in, yes, they look at some of your bylaws, your board minutes and stuff, but a lot of the work that they're auditing lives in what's happening in fiscal. It lives in what's happening in your accounting function. So that has to be airtight. Please like, share, and subscribe to our channel, and I'll see you guys in the next video.